BBC Sounds. Music, radio, podcasts.
Hello, in today's programme, a firm selling investments has gone into administration, leaving 14,000 people unsure of what has happened to more than £200 million. A new security measure by credit card providers mean you may need a mobile phone and a good signal to shop online easily. One listener has a pension fund worth £1, but the firm running it charges him £835 a year. And is your teenager entitled to hundreds of pounds in a child trust fund you've lost track of? But first, a firm with 14,000 investors who entrusted it with well over £200 million of their money has been put into administration by its directors. We reported 4 weeks ago that London Capital and Finance, or LCF, had its assets frozen by the regulator, the Financial Conduct Authority. It was concerned about how the firm promoted itself and that it offered ISAs when its assets were not suitable for that. John put £36,000 from his wife's cash ISA into these bonds. They'd hoped to get a better return.
So I looked through ISAs on the net, and nearly every time LCF come out as one of the top paying companies. And it was well recommended. I mean, I didn't just rush into this. I spent a month researching it. I never read an adverse item anywhere. LCF itself gave me the reasons to invest, and they just refer to it as a Series 4 ISA, 8% secured, and secured means to me safe, bond. It's literally to tell me he's got trustees in place that's got a debenture to cover any loss should LCF go into trouble. Now, LCF's gone into trouble. Have they got this debenture? I can't find that out from anybody.
If the worst does come to the worst and you get little or none of this money back, how will it affect you?
It is quite a large proportion of the money that we've saved throughout our life to pay for our old age. So I'm pretty gutted. You know, I'm just come out of hospital. Well, I had a heart attack. And to come out of hospital and to walk into this horror story is beyond belief.
Well, with me is Finbar O'Connell. He's one of the administrators appointed by London Capital and Finance. Finbar O'Connell, can you confirm the numbers? 14,000 investors, £236 million invested?
Yes, those are the numbers. I mean, 14,000 is a round number. We're trying to get an exact number. The company knows exactly how many bonds it's issued, but it's issued sometimes multiple bonds to the same people. So roughly 14,000, we're told.
And where is the money invested?
So it has been loaned on a commercial loan basis to different companies. Security has been taken over those companies. It's been lent for over different periods of time. So some for up to 3 years to match the borrowing from the bondholders.
And over how many companies are involved?
It is actually only 12 companies, which is good in a way because it means our focus on the borrowers we have to deal with is quite a small number. Yes,
but the small number implies that it's not, the risk isn't being spread. And I understand one of these is an oil and gas firm. There's been stories in the newspapers about that. 38 million pounds odd lent to them. 11 other companies. This was supposed to be low risk. If you lend to 12 companies, you're entirely dependent on the success of those 12 companies to get your money back.
Yes, as you say, as regards spread, it is 12 companies. Security is in place. We're meeting those entities next week, and we'll know more after that.
And the £236 million that the firm says it's lent out, is all of that accounted for by the loans to these 12 companies?
Yes. The numbers all add up. The monies which the bondholders have put in is represented by the loans to these 12 entities.
So if they remain solvent and they pay back the interest or the payments that are due and they repay the capital on time, then the bondholders could be safe, could they?
Well, that is.
There's a lot of ifs there, but if
yes,
that
and that's absolutely true. That is the hope. If that's the case, we'll maximise the return.
And John said there was security in place. He said it was secure. There was a debenture. There's a security trustee. All of these things were designed to make people feel this was a completely safe investment. Are there any signs that that's true? And a security trustee and £300 million worth of assets, it says?
Yes, the security trustee exists. The security trustee has security over LCF, so that doesn't really give any extra benefit because the bondholders are owed money by LCF anyway. LCF has got security against the 12 entities it's loaned the money to.
So again, it depends on those 12 companies succeeding in what they're doing and not failing at some point.
Absolutely, and nobody amongst administrators or listening to this has any interest in those companies becoming distressed. So we want to work with them on a very cooperative basis to ensure we get back the bondholders' money.
And why did the firm, briefly, why did it call in administrators? Because its assets had been frozen, it couldn't do anything, but in a sense everything was still chugging along. Why did it need to call in administrators at this point?
Well, the board was completely frozen. The board wasn't able to return any money to any bondholders, so they needed to bring in external parties who the FCA will actually allow to release the funds and repay the bondholders.
In a word, literally, how hopeful are you for the 14,000 investors?
It's week one of our assignment. We are going to do everything we can. We're going to work with these borrowers. So I'll be able to give more real evidence on that over the coming weeks.
Finbar O'Connell, thank you very much.
Thank you.
Now, online shoppers who live in remote parts of the country may find online shopping more difficult in future. A change in the law means that later this year, all card issuers will have to introduce new methods to authenticate who is using the credit or debit card. One method they will use is to send a 6-digit code by text. But what happens if you have Wi-Fi to shop, but no mobile signal to get the code? Dan Whitworth went to a Devon village.
With its rolling hills, deep valleys and winding country lanes, the village of Drew Stainton is a picture postcard setting for Rosemary and Sebastian Payne. Hello, Rosemary.
Yes.
Hello, I'm Dan.
Hello.
How are you?
Good. How are you?
Wet.
This is Devon. It is isolated, and the main problem is, in fact, the total lack of phone signal. Can't get any radio, have to have the radio through the Wi-Fi. And the Wi-Fi is very slow, so the radio drops.
Approximately 95% of the UK can receive a mobile phone signal, but that leaves many, like Rosemary and Sebastian, without one.
Shopping online is an absolute joy because we don't have to go to a city to do it, and that's part of the purpose of being in this area, and mostly it works a treat. And up till now, paying by the credit card has not been a problem at all. But once they start putting in this extra thing and say, happily, we're sending you a text message, there's no alternative.
This new rule, officially known as Strong Customer Authentication, is part of EU legislation already adopted by the UK, which comes into force in September. It's designed to help combat fraud and protect consumers' money. There are workarounds for Rosemary, but they're not real solutions.
At the moment, what I have to do when they ask for this extra code is either use a different card or ring them up where you can wait for half an hour while they answer. It can be done, but it's a pain.
It's important that central government and large businesses, when they make changes, are more aware of the possible impacts on the smaller number of users who don't have the kind of access that most people do to the internet and to wireless signal. I do find it difficult when changes make it more difficult without the people involved having thought enough about it and without being responsive when we say that there's a problem.
Sebastian talking to our reporter Dan Whitworth, and Dan's back with me now. Dan, how often are people going to be asked for this 6-digit passcode when they're shopping online?
The short answer to that is, Paul, it's not entirely clear. One estimate suggests this strong customer authentication could be asked for around 1 in every 4 transactions. It will also depend on things like how much you're spending. Less than around £30 should be okay, and whether or not it's a regular purchase you're making from a website you've used before.
And what have the banks and credit card companies told you?
Well, UK Finance and Visa and MasterCard were keen to stress this is all about helping stop fraud and that there are alternatives to getting a code via text message. It really depends on your individual bank or credit card provider. So that could mean sending a 6-digit code out via a landline, for example, or using things like fingerprints or facial recognition technology on smartphones connected to the internet.
Thanks, Dan. Well, I've now to talk to James Daly. He's the managing director and founder of the campaign group Fairer Finance. James Daly, what arrangements are there going to be, do you know, for people who struggle with mobile phone reception?
Well, again, there's not really any clear answers on this. Of course, there are lots of different ways that banks could get around this, and they have said if people are having problems, call us up. And some of them are better at it than others. You know, as Dan said, some are able to deal with that authentication over the phone. But whatever way it happens, if you can't get a mobile signal, it is going to be incredibly inconvenient. And they say this is all about protecting customers from fraud. But let's remember that at the moment, the liability for card fraud sits with the banks anyway. So actually, it's about protecting the banks from fraud.
So it's the banks that should be doing more rather than putting the responsibility onto consumers.
Well, exactly. And, you know, there has been decade upon decade of underinvestment in their systems. And it's only when legislation comes along that finally they sort of kick into action. But often they just don't get this balance right between security and convenience.
Yes, and as we heard from Sebastian, you know, they're not listening to people who say, well, we haven't got reception. And I must say, we've had emails in already. We've had one in from a lady saying she doesn't have a mobile phone. Julia says, I don't own a mobile phone. It's not compulsory. I can't receive a one-time password. So people without mobile phones, or, you know, you've forgotten to charge it up, you don't have it with you, this is all going to be much more difficult, isn't it?
Well, exactly. And of course, what they're forgetting here is that by not looking after that sort of 5% of vulnerable customers, they are in breach of all sorts of other regulations, treating customers fairly for a start. So I think they need to sort of get away from the idea that if you've got to 95%, it's OK, because actually those 5% do matter an awful lot.
Yes, and the British Retail Consortium that represents retailers is very concerned. It says it will introduce unnecessary friction and what it calls abandonment at online checkouts. So, you know, they want the CVV, the 3 digits we're used to carry on for another couple of years.
Well, of course, because if you're a consumer and it is turning into a complete nightmare just to make a simple online purchase, eventually you give up, don't you? And so, yes, if you're a retailer, you're going to be very concerned about that.
James Daly, thanks. And we did ask UK Finance, Visa and MasterCard to come on Moneybox to talk about this, but they all said no. Now, Moneybox listener Mike Youngman is stuck paying more than £800 a year for managing a pension that's worth virtually nothing. He has a SIP, a self-invested personal pension. The firm that runs it for him, GPC, is charging Mike an administration fee of £835 a year. The SIP is nominally worth £1. That's because his original investment, £28,000 for a room in an unbuilt hotel in the Dominican Republic in the Caribbean, is now worth effectively nothing. Despite this, Mike has been told he can't close the SIP and he can't stop GPC taking the annual fee for managing it. Now, GPC was not involved in advising him on his choice of investment for the SIP. Its role is to administer that pension. Mike had a financial advisor. It went into administration in 2013. I asked him why he followed the advisor's advice to move his money from a safe pension fund to buy a hotel room on the other side of the world.
Pensions, you know, you need to have them for a lot of years, and you have to have a big investment in a pension for it to grow. And that's one of the reasons why when this opportunity came along, I was told it's a lot better.
So what was the return they promised you?
They said it can vary between 16 and 20% once it's up and running. You know, it sounded quite good.
Well, the hotel Mike put his money in is not even built, never mind functioning. But at the moment, it's technically not insolvent. Most of his pension money went on that investment, but around £4,000 in cash was left, and that's held in what's called a client service deposit account, which GPC holds and takes Mike's fees from.
I said, so do I have access to that money because the SIP's no longer worth anything? They said to me, well, we can't do anything with it. You still got to pay us our fees as long as the SIP is live. They said someone has to take ownership of the SIP before it can be closed. I said, well, I've no idea what that means. I thought it was mine, so can I close it down? And they said, no, you can't. It's in a situation where you can't win.
In February, you'll be expected to pay £835. There's less than £600 in the account, so you will have a debt to GPC. What will happen then?
Obviously, let's say you owe us the rest of it. I'll say just take you to court if you like.
So you're basically just going to not pay it?
Well, I can't. That's the problem. My wife and I, we spend nearly 2 weeks every month with no money whatsoever in the bank or anywhere else. I have been telling GPC SIP for the past year that I won't be able to pay them this year, and they've been no help at all, really.
What would you like to happen?
I'd like to stop paying them fees, and I'd like them to actually reimburse me the fees they've taken me while this SIP has been worth nothing, because I think it was a bit below the belt, really. I think it was bad business of them to continue taking fees when the SIP was worth nothing, and they haven't been any help.
Well, Mike has received compensation from the Financial Services Compensation Scheme for the bad advice from that now insolvent financial advisor, but he used that to pay the costs of expensive legal action over his son's death. Moneybox asked SIP provider GPC for an interview. It said no. We asked if it would waive Mike's fees. In a long statement, it didn't answer that question, but said it was willing to close Mike's SIP account if the statutory requirements to do so are met. It said it had told Mike he would need to terminate his contract with the hotel company. It also pointed out that the agreement of the Financial Services Compensation Scheme is needed to enable Mike to close his SIP account, but it cannot speak for the FSCS. The FSCS told Moneybox in a statement,
GPC's SIP need to keep the SIP account open whilst the investment is still live, which in this case it is, as the relevant entity has not entered a formal insolvency process. FSCS does appreciate the frustration caused to consumers in Mr. Youngman's position and is in ongoing dialogue with all SIP operators to facilitate workarounds where the SIP operators have not already voluntarily waived the fees.
Well, Adam Samuel is a financial services compliance consultant. I asked him, why can't Mike simply close his SIP?
There seems to be some sort of strange standoff going on here that doesn't make a great deal of sense. The FSCS can no doubt be consulted about this and can no doubt agree sensibly to stop this from being a problem.
But the FSCS says it's trying to find workarounds, but it's not possible in Mike's case, as the particular resort he invested in hasn't yet gone into insolvency. So the FSCS seems to be saying it can't close the SIP.
In practice, the problem can be solved by the FSCS and GPC getting together. Alternatively, GPC can just simply waive their right to the charges, which is the grown-up way to behave until this matter has been properly sorted out.
So from what you say, that the SIP provider, GPC, could simply waive these fees?
Yes. The SIP provider could very easily just say, we won't take any further fees, and stop there. There's nothing to require any product provider from imposing charges on customers, even if they have a legal right to do so. The FSCS, in a message sent to Mike, made it perfectly clear that GPC could waive their fees. It's not a problem for them. And the obvious solution for Mike is to bring a complaint to the Financial Ombudsman Service and say, SIP provider, you need to stop charging me.
The SIP provider has said to him that it is entitled to charge this money and it will carry on doing so.
As a matter of contract law, the SIP provider may very well be right. However, the Financial Ombudsman Service, in a case that subsequently went to court, concluded that a SIP provider has an obligation under Principle 2 of the FCA, that's the Financial Conduct Authority's Principles for Business, to review the quality of investments that come into its SIP to make sure that they are fundamentally sound and appropriate to be held within a SIP.
There'll be many people listening who've got SIPs. How can they protect themselves against being in a similar position to Mike and being charged fees on a very small SIP?
Customers should be aware of what they're holding in their pensions generally. Do not hold assets you do not understand. Do not hold non-mainstream assets. Take proper professional advice from financial advisors, from independent financial advisors. I know Mike did that in this particular case, which is one of the most disturbing features of it in many ways. If you are recommended something that is alternative, have it looked at by a few other advisors, or just say no.
And how about the contract about the fees? Is there anything people should check on that? Because in this case, GPC seems to be entitled to charge £835 a year for an investment, underlying investment, that's worth £1.
There isn't really very much one can do about this. Financial advisors can advise you on the cheaper SIPs, but the better way to avoid this particular problem is simply to make sure that the investments being held within the SIP work.
Adam Samuel. Child trust funds were set up to give all children some money for them to manage and spend when they were 18. Every baby born from the 1st of September 2002 was given the money until the scheme was cancelled by the coalition government in 2011. Parents got a voucher of £250 or £500 in some cases to open an account for the child. A second payment was paid to some children who reached 7 before the scheme was cancelled. The money belongs to the child. They can manage it from 16, take it out when they reach 18. And as the first wave of recipients turns 16, there are concerns that many families have forgotten about the bounty that awaits their teenagers. Alive now to Peterborough to talk to Carol Knight. She's Chief Operating Officer with TISA. Carol Knight, how many lost accounts are there?
Our estimate is that there are around 1 million accounts. There were 6.3 million child trust fund accounts opened, and we think 1 million potentially is where we have lost touch with the owner.
And why have they lost touch with them?
A lot of those cases, and our estimate is around 2/3 of those cases, are where the parent or the responsible carer has never actually opened an account themselves. They were opened on behalf of the child by the Inland Revenue, so there's never been contact between the family and the provider.
So that was when the parents were sent the voucher, but then they did nothing with it?
That's right, and at the end of the year, then the Revenue opened an account for the child.
I suppose, though, you might expect those parents perhaps not to know anything about this, not to check up on it, and so the child may never find out about the money.
Well, that would be very sad because that money legally belongs to the child. And as you rightly said, at 18, they can actually have access to that money. So I think there is an onus on us, really, as an industry and in a wider conversation to try and help these children be aware that they have one. If they were born after the 1st of September to the end of 2010, then they have a child trust fund sitting there. And, perhaps we can help them find it.
Yes. So how do people find it?
Well, the first thing to do is for the child to ask their parent or their carer, because firms will be supplying annual statements on the performance of that child trust fund. So that's the first route. If the parent doesn't know,
well, they may have moved, for example. I suppose. Sorry to interrupt you, but they may have moved, mayn't they?
Absolutely. So they may not be receiving that and they may not have set up an online account. So the next course of action is to approach the Revenue. There is a special site on the Revenue's website where children can register and then find out who actually holds their child trust fund. And
you say children can register. Is it the child or the parent?
It depends who owns it. So at 16, the child can take ownership of it. So under 16, it would be the parent, and over 16, the child can do that.
So once you're 16, and there will be quite a lot, because it's sort of 6 months or 4 months, isn't it, since the first children reach 16, those 16-year-olds can now log on, find where this money is, and they can't actually take it out, but they can control what happens to it.
Absolutely. And so the next question then is what information can we provide to these children to get them to understand what money can do for them and how to make that money work for them?
Yes, I suppose it's something schools might be doing, isn't it, apart from anything else. But how do they prove who they are?
Well, that's the $6 million question. So the Revenue are obviously very careful about who they release the information to. So depending on the circumstances, the Revenue have a form for the young child to fill in, and then the Revenue will take it from there to ensure that the information goes to the right person.
Yes, so perhaps a bit fiddly. And finally and briefly, I was speaking to a parent with a 16-year-old the other day. His view was he didn't want his child to know about it. He didn't trust him at 18 to look after the money.
Well, far be it from me to tell parents what they need to do, but legally that money belongs to the child on their 18th birthday.
Carol Knight, thanks. And the link to that HMRC site is on our website, BBC Money Box website. But that is it for today. More information on that website, on the programme page. Adam Shaw's here with Moneybox Live on Wednesday, looking at universal basic income. I must say we've had an email from Tim who says he has to stand in the garden to get his mobile phone to work. Today, the reporter was Dan Whitworth, the producer Charmaine Cozier. I'm Paul Lewis. I hope you enjoyed that download of Moneybox. The programme's broadcast on BBC Radio 4 every week at noon on Saturdays. There's more information and details of how to contact us on our BBC Moneybox website. We tweet at Moneybox, and if you want us to look into something, email us moneybox@bbc.co.uk. And now, a programme about people who do something we'd never do.
It's 1994, and two pop stars are flying to a remote Scottish island.
Is your seatbelt on, Jimmy?
The two suitcases,
Yes?
each containing £500,000.
Doing that thing where you pull it around yourself and it looks like it's fastened.
They're about to do something really stupid.
Shall I take your suitcases?
Or really clever.
No!
You decide. This is the story of two men who burned £1 million of their own money. Why? Why would you do that? How to Burn £1 Million by Sean Grundy and Cara Jennings. Download the free BBC Sounds app and subscribe, or visit bbc.co.uk/sounds.